Supporting us. And I know we'll have more people trickling in as we go along, but I want to go ahead and be respectful of everyone's time and get us rolling here. So welcome everyone. Thanks for joining the call today. My name is Lisa Jordan. I'm the Managing Director of the IEA, and I'm the Executive Director of the Executives Association of Charlotte in Charlotte, North Carolina. Just a quick plug. I'd love to promote the IEA conference coming up in Detroit. Hopefully you've gotten emails from the IEA about this conference. We're really excited to be hosting it. The IEA board is hosting the conference in Detroit. We are partnering up with the Detroit Execs as well as the Windsor Execs. And they have two really strong chapters there. And we're looking forward to some great attendance and some fabulous speakers. If you would prefer to stay in Canada, if you're Canadian and would prefer to stay in Windsor, you're welcome to do that. It's about a 10-minute drive across the border there to the Detroit Athletic Club where the conference is being held. So the option to stay in the States or in Canada, whatever your preference is. And yeah, so details are on the website. I will also put it in our chat so that you can take a look there. Be on the lookout for emails from us about that. And then as we roll into this webinar here, I just wanted to say that if you would like to host an upcoming webinar, we do these every month, usually the third or fourth Tuesday of the month. If you have a topic that would appeal to business owners across the US and Canada, please reach out to me and let me know. I would love to get you on the schedule. And it's a great way to share more about your business and network with other like-minded business owners. So with that, I am going to introduce my new friend, Kingsley. Kingsley Leung is an avid musical theater performer with almost 2 decades of experience in the foreign exchange industry. He bought into an existing Canadian company called Agility 4X a few years ago and manages their growing Edmonton branch. He assists business owners on a daily basis who are looking for an expert voice on how to change money into money. And Kingsley is a member of the Edmonton Executives Association. So take it away, Kingsley.
Thank you so much, Lisa. I appreciate you having me on the webinar for this month, and thank you for everyone for tuning in. So as Lisa had mentioned, I'm actually a late bloomer when it comes to musical theater and the whole art scene. It wasn't until after I had kids about 20 years ago where I discovered I had a bit of a voice, and I got into theater and acting and stage plays and musical theater, and from there, I think really helped hone my craft when it came to foreign exchange. I tried to make a leap there, but I don't know. But maybe it's just like the way I present and relate to people and develop relationships. It's a really fun thing to discuss. So thank you. As everyone is aware, the topic that I wanted to bring to the table today is so relevant, and I would say especially more so today with all the different tariffs and all the different talk with trade between US and Canada and international. So one of the things that I do as a foreign exchange currency broker is we help businesses. We're at Agility, we're a full service broker, and what that means is we don't just give you the website and you just do it yourself and hope that you do it correctly. What we do is we actually sit down with business owners, whether it's face to face or over the phone, and we provide our advice, and we provide market analysis, and we essentially book all the transactions in terms of best timing and send international payments on behalf of all of our customers. So you just essentially send me all the invoices, and I take care of all your payments at pretty much no cost to send worldwide payments, whether it's to outgoing payments or receivables. We can receive money on your behalf and then convert that back to your local currency quite quickly. So one of the biggest topics that we are talking about with business owners is how to mitigate risk. So I wanted to share my screen real quick. I'm going to do this on here. Can everyone see that graph?
No, not yet.
So this is, you see that, Lisa? Okay.
No,
so
we don't.
This is,
we're not seeing your screen yet.
Okay, hold on. Share. Can you see that?
Yes, we can see that now.
Perfect. So I bring this up. This is a 1 year, year-to-date look at the exchange rates between Canada and US. And so you can see kind of like at the beginning, back in like almost a year ago, rates were sitting close to $1.36 for $1 US, right? So $1.36 for $1 Canadian, sorry. So, and you can see that over the course of the year, it went all the way up to about $1.47, and probably the low point was the beginning of September or the end of September last year, sitting at right around $1.34. And right now, today, sitting around $1.37 to buy US dollars. So as a business owner, when you look at this and you have, payables that you have to send, whether it's in US dollars or if it's in Canadian dollars, whatever the currency is, especially for Canadian to US, you can see just based on a 1 year mark how volatile it can be, all the way from $1.34 to $1.47. So how do business owners manage this, and how does this affect your margins? So I just kind of wanted to show not only the volatility of the market, even just on a 1 year mark, but how do business owners deal with that? And I kind of want to share some stories and some anecdotes with everybody. Lisa, do you mind stop sharing that for me?
Can do that. There you go.
Perfect. Thank you. So we have a company in Canada where they sell trucks and truck parts. And essentially, what this Canadian company does is that all their manufacturing is in the U.S. So there's a U.S. entity that manufactures all the chassis and everything for the trucks, and then it gets built in the U.S. And then they build school buses, they build buses for people to take during the day. So all these trucks and buses are being manufactured in the U.S. They come up to Canada, and then they sell these trucks to clients in Canada. The issue with that is because everything is billed in US dollars, the contract is made, let's say day one, but the trucks aren't finished for 6 months, 6 to 7 months. So by the time the trucks come back to Canada fully built, that's when they have to pay for the balance of funds. But within that 6 month period, anything can happen with the currency, as we all know. So if you have a contract and it's pegged at, let's say, $1.37 today, but 6 months from now, let's say the dollar goes to $1.40, now you're paying 4 or 5 cents more than you would have at the beginning of the contract. So how do you budget for that? How does that affect your margin when the dollar changes by 4 or 5 cents? So one of the strategies that this company has used in particular is a hedging strategy, which I'm sure many of you have heard of. So a hedging strategy, what our product is called a forward contract or a future. So essentially what this forward contract allows a business owner to do is to buy into today's rate for up to a year. So wouldn't it be magical if you could just say, you know what, I know that over the course of the next 6 or 7 months, I'm going to go through $500,000 US. But I want to lock all of that in today, but not have to pay until 6 months from now. So the good thing about that is you're not using any cash flow to utilize to purchase your US dollars right now, or your currency right now. And you're also guaranteed today's rate 6 months from now. So when you have to actually pay out that contract, that $500,000 that you purchased, you're guaranteed today's rate, which gives you two things. It gives you cost certainty, so you know exactly how much it's going to cost you to buy that currency, and also you can mitigate the risk of the currency market. So if it goes up 10 cents, doesn't matter. On the flip side, if the currencies get better for whatever reason, because it does happen, then again it's a bit of a gamble, right? In terms of that. But I think most business owners, they prefer the cost certainty. They don't want to mess around with the tight margins. They don't want to mess around with having to end up paying more down the road. So forward contracts or hedging strategies are a very common tool for Canadian companies, and in particular this Canadian company that essentially doesn't realize their contracts for 6 or 7 months. So as with currency, like I said, depending on what the Bank of Canada or the U.S. Federal Reserve, whatever they end up doing or saying, it really does make a difference and does move the needle in terms of how much it's going to cost you. So I just wanted to kind of, if it's okay with you, Lisa, I wanted to kind of throw it out there for maybe some questions in the chat to see if anyone had any questions about particular situations and how you can, if there's any suggestions I can make in terms of how to mitigate that risk, or what we see on a day-to-day basis as a currency broker.
Sure. Yeah. If you have any questions, we have a small group today, so feel free to unmute yourself and ask Kingsley directly what's on your mind here, or what you're hoping to learn, or what drew your attention to come listen to this webinar today.
No questions. I'm going to be singing. I'm going to be forced to sing. I'm just saying.
Is anybody on the call someone that deals with foreign currencies, exchange rates, that kind of thing in your day-to-day business?
Okay, Kingsley, I'm going to word this wrong, but I brought this up at our IEA. So with the volatility in the US dollar, and I'm going to pronounce it wrong, so you can make fun of me today if you want, but we're talking about learning how to trade or to purchase in Chinese currency, the yuan. I think did I say that right for a change?
Yeah, it's the Chinese yuan.
Yeah. So what can you speak on something like that? Just because there is less volatility, or at least we're researching it anyhow to see. What are your thoughts on that sort of a process or approach?
Yeah, absolutely. Thanks, Steve. So one of the good things about using like a currency broker is that they have access to all like 30 plus currencies worldwide, and they're able to, currency brokers are able to purchase money at a much better rate than the traditional means, right? So one of the things that we're seeing is a lot of companies in North America, US and Canada, obviously, they're dealing directly with the home currency of whom they need to pay. China is a perfect example. They used to, obviously, they accept US dollars, but more and more companies the companies in North America are realizing that if they can send Chinese renminbi or Chinese yuan directly to China in their home currency, a lot of times that product is priced better than what you could be paying for if you had to pay in US dollars. Because if you're paying them in their home currency, they don't have to factor in the exchange. Because if they receive US dollars, they would have to change a lot of that back into their home currency to pay for wages, to pay for all their utilities and to pay staff and that sort of thing. So we've been finding over the course of the 2 decades that I've been doing this, a lot of times product is priced better if you can pay in the home currency. Now, with your specific example, Steve, in terms of paying Chinese renminbi to China for your product, again, we can lock in on a hedging strategy. If you know that you're going to go through X number of Chinese currency over a period of time, you can lock into today's rate, and you know exactly how much it's going to cost you in Canadian, right? Versus and again, conversely in US dollars if you're in the US sending Chinese currency. So I think the strategy is there's 2 ways to look at it. You can lock into a specific amount of renminbi, and you know exactly how much it's going to cost you over a period of time. What I've been recommending as well is and this goes more so towards maybe Canadian US, not as much with these exotic type currencies because there is less volatility, which you're right. But I would say what happens is the best strategy is a hedging strategy, and as well as using the spot rates. So for example, if you know that you're going to go through $1 million worth of renminbi, I would recommend maybe purchasing 70-80% on a hedge so that you're guaranteed that rate. But a lot of times, because Canadian US, for example, are very much more volatile, I would recommend using then for that extra 20%-ish, use the spot rates. And so anytime you need to make a payment and you're drawing off that contract, you can either use the forward contract or you can use the spot rate, depending on which is better. And so basically you're cost averaging. So a lot of companies use this strategy to essentially say, you know what, I know that I'm guaranteed this rate because if it gets worse, I don't want it to get worse, but if it does, I know that I'm locked in and that risk is mitigated. But if the rates get better than the contract that you locked it in at, you can purchase that rate on the spot and you can utilize the savings on that versus your forward contract. So does that, I don't know, I'm not, hopefully that answers your question, Steve. Essentially, using a hedging strategy for any company that's doing a significant amount of import and or export, having some sort of hedging strategy really should be in your arsenal because it really is a smart way to mitigate currency risk and to get you protected when it comes to movement on any currency.
Thanks, Kingsley. There's quite a few questions popping up in the chat here. I don't know if you can read those. First from Ruben. Do you recommend clients have trade credit insurance?
So we do work. So in Canada, we've partnered with a company called the EDC, which is the Economic Development Canada. And essentially, we are a preferred vendor with them, and they deal with specifically exporters. And they have something what's called an FX guarantee. So if you were a Canadian company and you purchased a large forward contract, and for whatever reason, there's a margin call on that because let's say the dollar dropped 10 cents all of a sudden, and there would be a margin call on that. The EDC would make everything whole. They would essentially pay us to make us whole. And there's a guarantee that you still will, as a business, you still will maintain that contract and you would pay a slight higher premium to the EDC to kind of offset that, right? But instead of having to deal with a loss of 10 cents and a huge margin call, you're paying a smaller amount to the EDC to make everything whole. So that's essentially like a insurance policy or an FX guarantee. In this case, it's called an FX guarantee. But I would always, in a volatile market, always recommend looking at all your options, especially things like an insurance policy with your FX.
Great. Bing has a couple of questions here in the chat. Bing, do you want to just chime in here?
Yeah, sure. Can you guys hear me?
Yeah, go right
Yes.
ahead.
Yeah, sure. So you mentioned that hedging is one way to kind of mitigate the risks. Pretty much, I'm essentially pre-buying that currency, right? So if I know I'm going to spend an X amount of dollars or whatever currency in a year, then I should basically pre-buy that when that dollar drops in value in comparison to Canadian, right? Is essentially what hedging is. Am I correct?
Correct. So, I mean, a lot of companies that get into the hedging strategies, you're not getting into it to gamble. It's not kind of like, well, I think it's going to do this, so maybe I should lock in something, right? So, the companies that get into hedging are the ones that really want to have the cost certainty, right? So whether you just don't want the rate to be worse than what it is today. If that is important to you, then a hedging strategy like forward contracts is the best way to mitigate that risk. If you want to play the market, then I probably wouldn't recommend a hedging strategy because then you probably want to just take advantage of when the rates are good to buy, right? And you just take advantage of buying on the spot. But you're absolutely correct, Bing. If you are looking to pre-buy for a period of time and know exactly how much it's going to cost you by the end of that contract, that's a great hedging strategy for your business.
I see. And are there any other ways that, like as a broker, you can help me mitigate that risks besides hedging?
Yeah, so I mean, the forward contract is our primary risk mitigation product. And as I alluded to at the beginning, as a currency broker, because we have very little overhead, we're not like a bank. Because we bulk buy currency, we're essentially almost 2 to 5% better than some of the traditional ways of buying currency. So if you think about that, if you're spending a few $1,000s every week, and then that adds up if you're buying a six-figure amount every single month. The more zeros you tack onto that, you can see how quickly a 2 to 5% difference versus your local bank, for example, how much of a difference that could be as a savings right off the bat. But in terms of mitigating risk, the one main tool that we have is a forward contract, which is very flexible at the same time. So we typically ask for a 5% deposit to lock in that forward contract. However, if we're able to see financials, for example, and you have very healthy financials, we're seeing some growth, we can actually get you approved for zero deposit forward, which means it won't cost you a cent to lock in that rate for up to a year. So I would say forward contracts or futures are probably the best way to look at that. There are other things in the market. Other brokers out there will offer what are called options. So you may have heard of options, where essentially you're locked into a slightly worse rate. And but the problem with the problem with options, it's a much riskier endeavor. So it looks like you get a much better rate at the begin with, but if the rate changes significantly, you are actually that rate changes for you, which means you end up paying the worst rate in that difference. So yes, it looks good at the onset, but I would just advise anyone who's looking at options, it's much riskier for you to look at hedging on an option. So that's why we actually don't sell options. We just provide forward contracts to companies who just want that cost certainty. You can draw off that contract any point in time. So, for example, you buy $1 million of currency in month, and that's over a course of 12 months. In month one, you have to pay a supplier, so you draw off that contract, and you only pay at that time, but you know exactly how much it's going to cost you when you draw off that contract, and then you have 12 months to finish it off, or however long you want.
I see. And just another question, do you guys facilitate payments cross-border also? Like if I make an account at the brokerage and I buy currency through you guys, do you guys help like store those funds? And then if I need to pay out a vendor or supplier, do you facilitate that transaction as well?
Yes,
And
we
yeah, same
absolutely
as
do.
the other
Yep.
way around.
So
Yeah.
as a full service broker, what we do is not only purchase the currency at a better rate or offer hedging contracts, but we can send international payments on your behalf, which we do every single day. So all of our customers, I would say the majority of them, I would say 97% of them use us to send payments internationally, right? So if you have to send a payment to Europe or to China, we can do that for you just as fast, if not faster, than some of the traditional ways, but at very little cost. Like for example, a wire transfer to China is a flat rate of $15, 1 5. So $15 is the most you'll ever pay for a wire transfer. Within North America, absolutely free. There are no charges to move money cross border between Canada and US. If you need to send money to Mexico, also no charge when we send that. We actually have we're a Canadian, so Agility Forex is the company that I'm with. We're based in Canada. It's a Canadian company, but we also have a bank in the US, domiciled in the US, which is BMO Harris. So when we send money out of the US, it doesn't cost us anything, so we don't charge our customers anything.
Mhm. I see. Okay, awesome. And not to hog the chat here, but I just have one more thing. When you were talking about sending our RMB to like Chinese suppliers as their home currency, um, it could work because obviously they don't have to deal with the conversion rate. But based on my experience, they won't take RMB as payments if they were to export that product. I'm just wondering, have you had experience with that? So they were claiming that they have to take foreign currency in order for them to export.
So in my experience, depending on the manufacturer that you're using in China, they will accept US and or renminbi. But again, there are certain manufacturers in China that will only deal with one currency. which I've seen. I've seen they, even if you offer to send them in their home currency, they want US dollars for whatever reason, right? Sometimes some of the manufacturers in China will only have a US dollar account. It's not a multi-currency account. So even though they still need to convert it back into renminbi, they have to only accept it in US, and then they let the bank in China convert it back into renminbi, right? So it really does depend. But like I said, we see a ton of manufacturers accept their local currency, but there are also a lot of vendors in China that will only accept US dollars. So it really does depend on who you're dealing with over there.
Okay, awesome. Thank you.
Yeah, good question, Big. One thing that we've been seeing more and more of, and it's not just on the business side, but it's on the personal side. We've been seeing a lot of, especially for Canadians and snowbirds from Canada, buying and selling vacation property in the US and Mexico. We've been seeing a huge influx of individuals and especially people buying from the US, buying property in Mexico, Costa Rica, all over the map. So if you think about what we do, it can be applied to individuals doing large purchases, right? So we don't have a retail side to our business. So I can't offer you cash, and I can't offer if you're looking for a few $1,000s to travel to Europe. We don't do that. But if you're looking to buy a house in Mexico, or you're looking to sell your place in Europe, and you need to have someone facilitate the transfer of funds, because we have banks all over the world and we have accounts all over the world, we're able to facilitate either being the hub to receive money on your behalf, or we can send money to whom you need to pay. And if you're buying a house or a property, vacation spot, we can certainly do that at very little cost, if anything, and also get you access to the same kind of wholesale rates that we're able to offer all of our business clientele. So I just want to mention that.
Thank you. Any other questions?
Was there another question in the chat there, Lisa?
That covers everyone who wrote in the chat. Like I said, it's a small group, so please feel free to unmute yourself and
Kingsley, thank you for the wonderful information. But since you mentioned personal, just on a curiosity, being that you're a trade expert here, when you travel on an individual basis, they always ask you, do you want to pay in local currency or in your home currency? What recommendation would you make for us that travel and are using that? I don't know. Just an aside.
No, that's good. Yeah, absolutely. No, that's a good question, Ruben. Like, can I ask specifically, are you thinking about like to Europe in particular, or
even
to Mexico? What areas?
Europe, mainly Europe.
Okay. So what I've been noticing is that people who are traveling to Europe and dealing with euros, and even pounds for that matter, the UK, but specifically euros, a lot of the places in Europe have really good exchange rates when you're using kind of like a non-bank. So other smaller brokers or other retail brokers in Europe are very good when it comes to competitive exchange rates. So the mindset in Europe is very different than here in North America. Everyone in Europe, wherever you travel, very used to using brokers. Very little are people using banks traditionally in that sense. A lot of people will use banks to hold their money and investments, but when it comes to mortgages, when it comes to loans, when it comes to foreign exchange and currency, I would say the majority of people in Europe are using brokers, which we don't quite see here in North America yet. So if you're traveling to Europe, what I've seen is that I would take your US dollars, and when you get to Europe, find one of those local smaller brokers, non-bank brokers, and they will exchange your money and provide you cash right on the spot at a much better rate, much more competitive rate than the bank.
Thanks, Kingsley. I'm wondering if Ruben's asking though, like when you use a credit card in a foreign country and it'll say,
Sorry, Lisa, I can't hear you.
oh.
Yeah. So
Hear me
Kingsley,
now?
this is Ruben
Oh,
again. So what I was
Yes, Ruben.
asking is when usually when I go and pay at like a restaurant or any place else and I'm using my credit card, they would say, do I want to pay in local currency, in euros in this case, or do I want to pay in US dollars?
Right. So what I would recommend is, and again, if depending on the amount that you're spending, if you're just spending a few $100s here and there, using your US credit card would probably be the easiest, because typically the exchange rate between when your credit card charges the conversion back into, because it's to pay euro, once it charges you the conversion, it's not as bad as people think it is. So uh, if it asks whether you want to use the local currency or your keep your US currency, it almost makes no difference. It's very close together, right? What I've been recommending, and this is a quick plug for another company that I use personally, is Wise. So WIZE. So Wise Payments. They actually have a credit card where you can preload on whatever currency you want, and it debits right out of your US account or Canadian account, whatever account you want. But essentially you use that to travel and you can pay in that local currency. So you're two things. You're taking advantage of better exchange rates through Wise. And second of all, you're able to use this Wise card as almost like a debit card to tap or to use as with vendors all over the world, whether it's Mexico or Europe. You can use this Wise card just like as you would with any other credit card. So that probably would be a bigger savings for you instead of using your US credit card to pay in your local currency or in the home currency. So I would probably consider that because I've looked at, we've compared exchange rates with Wise, and they've been very competitive. They're very low. They're very good, but they're good for retail. I wouldn't necessarily recommend them for corporate or business dealings because um, they have limits, and sometimes it takes a long time. And as a company, if you're looking to send payments right away, they typically won't handle that fairly quickly. But for personal use, I've been finding that it's been very good.
Great, thank you. Kingsley, can you hear me now?
Yeah, you were like cutting out before, but I can hear you now.
How strange, technology. Yes, I had the same question as Ruben, so I'm glad that he asked that. I was actually just in Ontario last week, and I kept getting that question, should I pay in Canadian dollars or US dollars? So I didn't know about that credit card before, but I'll look into that for future, for sure.
Yeah, and also it's interesting because I know that there's a lot of credit card companies now, and even a lot of banks that offer these credit cards that are essentially borderless. So they call them borderless credit cards, and they claim that they don't charge an exchange rate. So I don't have any personal experience with that, but from what I hear anecdotally is that you have this credit card, and if you're based in the US and you want to come to Canada, it's whatever you're paying. Let's say if something is $10 Canadian, you're paying $10 US. So again, I don't know how it works, but it's called a borderless um, credit card. So maybe that's something to look into as well.
Okay, for sure. Do we have any other questions for Kingsley today? Kingsley, do you want to share your contact information in case folks want to reach out or follow up with you?
Yeah, absolutely. So again, we're based in Canada, but we deal with companies all through North America and Mexico. So I think I don't know how you want to handle this, Lisa, but I think I provided my email. Should I put it here in the chat or?
Yeah, put it in the chat. That's a great way to get it out for everybody. And that way it'll be on the recording. I should mention that as well. This Zoom will be posted on the IEA YouTube channel, usually in the next 24 to 48 hours. So you just go to the IEA webpage, ieaweb.com, and from there you can click over to our YouTube page. We'd love for you to like and subscribe and share this webinar with anyone that you think might benefit from hearing what you learned today.
Yeah, absolutely. I would say if you're a business in the US and you're sending, payments overseas, it's definitely worth a discussion to have with the currency broker. And whether it's myself here in Canada or our partners that we deal with in the US, we can get you set up with a broker with our partner in the US, and they can help you right off the bat to purchase money at a much better rate and also send money internationally on your behalf. So definitely worth a conversation if you're an importer or exporter. Good question. Being the question was, is there a minimum? So typically for us, it's a 10,000 Canadian value minimum with our supplier. So if you're a regular customer, obviously we can still do it. For example, if you have a $10,000 bill, Canadian worth, but then you're like, oh, Kingsley, I forgot to send this vendor $1,000. I missed it. I missed that. Of course, we will handle that for you on your behalf. The rates kind of get slightly adjusted to more retail type rates under the 10,000. But again, if you're only trading, say, $1,000, even a 2% savings or a 2% hike is really not too significant. So we're typically dealing with companies that are well over that. So our wheelhouse has been small to medium sized businesses that are spending probably anywhere between 50, 80, and well over $100,000 worth of currency every single month or every single week at a time. But 10K is the minimum.
Great. Good information.
Yeah. So that's pretty much it. That's all about me.
Okay, well, thank you for sharing your wisdom with us today. Like I said, this will be posted on the IEA YouTube page. And if anyone has anything to follow up with, please reach out to Kingsley in the email or mobile number provided in the chat. And hope to see some of you in September at the Detroit conference. And if not then, at least at the next webinar.
Yeah, we were talking about that one in Detroit. And again, I want to extend my personal invitation. If anyone is coming up to Edmonton or anywhere close to Alberta, more than happy to have you come check out our chapter. We meet Friday mornings and at the Edmonton Executive Association. So more than happy to host anyone who wants to come for a visit.
Thanks, Kingsley. We actually had two members from Bakersfield, California, traveling through Charlotte on business last week and got a chance to have them meet with some of our members. And all of our members really enjoyed that and the connections they made at that lunch. So it's always great when you're traveling to look up execs in other cities and see if you can pop in and get together with a few, even if it's just for a quick lunch or coffee or something.
Absolutely. No, that's great. I'm looking forward to visiting the chapter in Hawaii.
Oh, yeah, definitely. That's a good one for sure.
Yeah.
Hey, Kingsley, just one more thing regarding the minimum. So if I use the hedging strategy and I pre-buy, let's say $20,000 worth of Canadian value into US dollars, however,
Yes.
when I pay my vendors, there's usually like the 30% deposit to start production, and then remaining when they're finished production, right? So the 30% would be in many cases less than the $10,000 value. Is there a minimum for each transaction, or is it just for the initial currency purchase? If that makes sense.
So it's just it's basically per transaction. So if you're buying a $20,000 forward contract, you're already well over the minimum. And then if you need to draw down, like if next month if you only need to send 5,000, that doesn't constitute necessarily a currency transaction because you've already purchased the money,
I see.
right? So so the initial transaction is the purchase of the 20K on the forward,
Okay.
right? Yeah, and then from there you can do as many forward drawdowns as you want, and as little as small as you want. Well, there's a limit to that, but if you need to send smaller amounts, that's that's not a problem.
I see. And while you're like, if once I purchase the currency from you at your brokerage, do you offer any type of like I understand that at the bank, I could put it into something like a cashable GIC where I'm still earning some sort of interest while the money is sitting there. Do you have something like that in
So
comparison to the bank?
Yeah, so we currently don't have like an interest-bearing account. However, what I would recommend is, buy the currency through Agility or any other currency broker at a better rate than the bank, and then we would just send you back the money back into your bank account, and then you can use that to put into that GIC, right?
Oh,
So
I can do that?
you're kind of getting yeah, absolutely. So not only can we send payments on your behalf, but we can just if you want the money just back into your own account, of course we can you're a payee, we can send you back the money.
I see.
You're
Yeah,
you're just
perfect.
using us to buy the money. That's pretty much what it is, right?
Okay, I see. No, that's perfect. Thank you for that.
Yeah, of course. That's a great question.
Mhm.
All right, well, thanks everybody, and thanks for your time today, Kingsley. I think everyone learned a bit here, and it sounds like you're a great resource if people have further questions on the subject matter. So thank you for your time.
Thank you very much. Appreciate it.
All right, have a good one, everyone.
Thank
All right, take
you.
care.